Welcome back to XRP Insider Network, the place where we break down what's really happening behind the scenes, before the headlines catch up and before the market reacts. If you want to stay ahead of the noise, make sure you like this video, subscribe to the channel, and turn on notifications because what's coming next is going to move fast when it finally hits. Now, let me ask you something. What if Ripple didn't need to announce a price target because the plan itself already tells you the price will be much higher? Because that's exactly what just happened. Over the last stretch of updates, interviews, and development signals, the Ripple team quietly dropped what can only be described as a long-term XRP price bomb aimed straight at 2026. Not a tweet saying XRP to the moon, not a flashy number, but something far more powerful, a structural roadmap that only works if XRP is valued dramatically higher than it is today. Most people missed it. Even many XRP holders skimmed right past it. But once you connect the dots, you realize this wasn't accidental language. This was deliberate positioning. Here's the thing you need to understand. Ripple has never marketed XRP like a hype coin. They've never chased retail sentiment. They've never leaned into meme culture. Instead, they've spent over a decade building relationships with banks, regulators, governments, and financial institutions. That takes time, a lot of time. And that's why XRP has felt boring to so many people. But boring is exactly what infrastructure looks like before it turns essential. Recently, Ripple executives have repeatedly emphasized that the next chapter for crypto is not speculative growth, but utility at scale. Scale doesn't mean millions of users. Scale means trillions of dollars. And when Ripple talks about scale, they're not talking hypothetically anymore. They're talking in timelines. Those timelines point directly at 2025, 2026, and beyond. This is where the price bomb comes in. Ripple has been openly discussing global liquidity corridors, tokenized real-world assets, and on-demand settlement infrastructure that simply cannot function with a low-priced bridge asset. Let that sink in. XRP is not designed to be cheap forever. It's designed to be efficient, and efficiency improves as price increases. That's the part most retail investors get wrong. When XRP is priced higher, less of it is required to move large value. That reduces slippage. That improves speed. That lowers operational risk for institutions. From an institutional perspective, a higher XRP price is not a problem. It's a feature. Now ask yourself this. Why would Ripple be pushing toward full-scale adoption, enterprise-grade reliability, and regulatory alignment? If XRP were meant to stay at retail-friendly prices, they wouldn't. Banks don't redesign systems for assets that fluctuate wildly at low valuations. They integrate assets that are stable, liquid, and valuable enough to trust. This is why Ripple has been so patient. They understood something most people didn't. Price follows necessity, not excitement. As regulatory clarity continues to solidify, especially across major financial jurisdictions, Ripple's strategy suddenly makes sense. They weren't waiting for a bull market, they were waiting for permission, and that permission is gradually arriving. Now let's talk specifically about 2026. By that point, several major shifts converge. Legacy banking infrastructure upgrades reach maturity, cross-border payment standards modernize, tokenization frameworks become operational, central bank digital currency pilots expand or go live. Ripple has positioned XRP to sit directly in the middle of that transformation, not as a competitor, as a connector, and connectors must be trusted, liquid, and valuable. If XRP becomes a neutral bridge between multiple financial systems, its price can no longer be determined by retail trading psychology alone. It becomes a function of demand, throughput, and scarcity. This is where the math starts to matter. XRP's total supply is finite. Yes, distribution continues, but the cap does not change. If global settlement demand rises while supply remains fixed, price pressure becomes inevitable. That's not speculation, that's basic economics. And Ripple's recent messaging suggests they are preparing for that exact scenario. They're talking about readiness, about resilience, about long-term sustainability. Those aren't words used for assets expected to remain stagnant. They're words used for systems that are about to be relied upon. If you're starting to see the picture forming here, you're already ahead of most people. And if this breakdown is helping you connect these dots, make sure you like and subscribe, because this channel exists to stay ahead of consensus, not chase it. Now let's address the elephant in the room. Why hasn't XRP already done this? because the system wasn't ready yet. Infrastructure doesn't activate until everything else is aligned. Regulation, compliance, integration, trust. Ripple chose the hardest path, and that path takes the longest. But when it finally activates, the repricing doesn't happen gradually, it happens suddenly. And that brings us to the second half of this story: what happens when the switch flips. Now, here's where things get really interesting. When infrastructure activates, the market doesn't get a warning. There's no countdown. There's no announcement saying, hey, everyone, repricing starts tomorrow. It happens quietly, then all at once. And that's why 2026 keeps showing up in Ripple's long-term narrative. By then, the groundwork is done, the rails are laid, the institutions are onboarded. At that point, XRP stops being evaluated like a speculative crypto asset and starts being evaluated like a financial utility. That distinction is everything. Speculative assets trade on sentiment. Utilities trade on necessity. Once XRP is necessary, the question is no longer, will the price go up? The question becomes, how high does it need to be to support global liquidity demand? That's a completely different conversation. This is why Ripple never responds to price prediction debates. They don't need to. The model speaks for itself. If XRP is used to settle even a fraction of global cross-border transactions, the current price makes no sense. And Ripple knows that. That's why they focus on volume, not hype. That's why they focus on partnerships, not marketing. That's why they focus on compliance, not trends. They're building something that outlasts cycles. Now, does this guarantee a specific price by 2026? No, anyone giving you an exact number is guessing. But what we can say with confidence is that Ripple's roadmap does not align with a low-value XRP. Their vision requires scale. Scale requires liquidity. Liquidity at scale requires price appreciation. There is no way around that. This is the part where skeptics push back and say, I'll believe it when I see it. That's fair, but understand this. By the time you see it, the opportunity phase is already gone. Early positioning always feels uncomfortable. It always feels slow. It always feels uncertain. That's the cost of being early. Most people prefer certainty, but certainty only arrives after repricing. Ripple's patience has been misunderstood as weakness. In reality, it's been discipline. They waited while others rushed. They complied while others resisted. They built quietly while others chased headlines. And now, as the global financial system moves toward digitization and tokenization, Ripple is already inside the room. XRP isn't trying to break the system, it's trying to power it. That's why the 2026 narrative matters so much. It's not about hype cycles, it's about adoption cycles. And adoption cycles are slow until they're not. When institutions decide something works, they don't dabble, they deploy. And deployment at scale forces repricing whether the market is ready or not. This is why long-term XRP holders continue to stay patient. They're not waiting for a pump, they're waiting for activation. So did Ripple just drop a 2026 XRP price bomb? Yes, but not the way most people expected. They dropped it through planning, through language, through infrastructure signals that only make sense in a high-value scenario. And once you see that, you realize XRP's future won't be decided by tweets or trends. It will be decided by usage, and usage changes everything. If you've made it this far, you're already thinking differently than most. Make sure you're subscribed, because as these timelines tighten, the signals will get louder and the market reaction will get faster. Stay patient, stay informed, and stay ahead of the curve. This is XRP Insider Network, and the real story is just beginning.